We spend a lot of time looking at risk in the context of hotel investments because it's fundamental to our free enterprise system that rates of return are a function of risk. And if you can understand risk and quantify risk in looking at hotel investment opportunities, then you'll have a better chance of looking at and examining the types of returns that hotel and hospitality type properties may deliver.
You've reached the Seven Stones Indonesia podcast, where we talk with business people, entrepreneurs and influencers in Bali and Jakarta about business in Indonesia. They share their visions and insights with us in conversations around why they do what they do, which we hope will inspire you to believe you too can have a positive impact and make a difference. We hope you enjoy what they have to say, and if you do, please like, share and subscribe.
Welcome back to Seven Stones Indonesia podcast, and today we're sitting down with Terry Nielsen, CEO of Seven Stones Indonesia, and Ross Woods, who is a hotel investment strategist. So Ross, tell us a little bit about who Ross is and what's a hotel investment strategist.
Thanks, Andy. I appreciate the opportunity of spending some time with you today. Hotel Investment Strategies is a hotel investment advisory service that provides independent, objective and in-depth analysis for primarily hotel investors, but also hotel developers, financiers and lenders in the hospitality industry. And in more recent times, I've established a practice here in Indonesia because I just believe there is just so much opportunity in this country for hotel developments and the acquisition of hotels from offshore investors.
How long have you been doing that?
Oh, look, I've been involved in providing advisory services since the 1970s, so it's been well over 40 years. Yes, yeah, that's for sure. That's for sure.
And how did you first get into it? What was it? Was it like a trigger moment that kind of got you into hotels? Or?
Well, I became involved indirectly. I was working in the town planning department of the Gold Coast City Council in Australia. And in that position, I came across a lot of applications for hotels and service departments on the Gold Coast. And then I was with the Gold Coast City Council for a couple of years. And then I was the first research and development director for the Queensland Tourist and Travel Corporation, essentially assisting developers and investors in the expansion and growth of tourism. And from there, I had a number of years with KPMG and Horwath International, a big international consultancy firm in the hospitality space. And then I was headhunted to move to Prudential in North America to oversee their hotel portfolio.
And you were there for what, 20 plus years?
Yes, I was in North America, in New York, for about 22, 23 years. And
how did you like that?
It was challenging. I enjoyed living in the States, and I did certainly when I was with Prudential. I oversaw a portfolio of about 30 hotels, so there was a lot of travel involved, travelling to all the states and all the major markets. And then in about 2006, I established my own consultancy practice, Hotel Investment Strategies, and most of my clients in the States were private equity groups as well as REITs, real estate investment trusts in the lodging space.
Okay. So would it be fair to say that the core of what it is that you do, the services that you provide, is based around data? Is that fair?
Yes, yeah. We take a pretty deep dive empirical analysis of trends and opportunities. And I should say that while data is an important part, it's how you interpret data. You're trying to unearth trends that perhaps others in the market haven't seen. Because in a competitive environment, you're wanting to get a jump on competitors. So investors are really wanting to look at opportunities that others may not see, or to avoid markets that may be oversupplied. So we spend a lot of time looking at risk in the context of hotel investments because it's fundamental to our free enterprise system that rates of return are a function of risk. And if you can understand risk and quantify risk in looking at hotel investment opportunities, then you'll have a better chance of looking at and examining the types of returns that hotel and hospitality type properties may deliver.
I mean, that's something that we talk about a lot, isn't it, Terry? The sort of investment opportunity, particularly for large hotel groups and maybe not necessarily international chains, but domestic chains too, right?
Yeah, I think like Ross says, and we talk about that, the Indonesian market has an enormous potential, but there is a lot of lacks in the sense that there's very little data or accurate data. Like Ross will say, how to quantify the data. You know, some of these feasibility studies we see, some of the reports that we see, has very little accurate data, and therefore I think that when we look at in particular Bali, maybe a lot of the big hotels here, they're owned by some of the bigger groups, old families from both Jakarta and Bali, and there's no penetration or appetite for foreign investment funds to come in simply because they cannot measure.
Why do you think that is? What's the sort of the problem with data in this market? Why can't we get hold of that data?
I guess the market here kind of came to be. Bali was famous for the artists and whatever that came in the 30s, 40s, and 50s and so on, and slowly that changed into tourism. The Nusa Dua sort of complex was built, and off that came more hotels and also villas and so on. But in a organical or not controlled matter. So it kind of just grew and then hit a tipping point. And it went not out of control, but quite. When you look at the market today, it's massive. But you cannot talk about the market as in what it is, prices up, returns of investment in hotels or even villas that we deal with. And I think
that was we were honoured to have you at a seminar yesterday, or a talk to a bunch of realtors yesterday, and that was kind of clear that there was this space that needed to be filled, and the space is, where's the data? How do we actually work together and collaborate and get the data together?
I think one example with Ross, we met a couple of hotel owners yesterday who is going through a process of a possible sale, and they obviously had a price of what they expected for this resort, and the first question that came from this investor is like, how do you come up with that figure? And then they had to go through then hiring in someone to actually do a study to show, okay, here is the mortar, bricks, land, location, and then into market potential, room rates, and so on. And then that investment fund, which is Indonesian based, can sort of tick off in their due diligence and say, yeah, this is good to go. And if we look at the villa market there too, it's very, like I use this example, we can have a buyer, we go up to Canggu and says, oh, here is $1 million villa. And the buyer will then ask, oh, what is it a good deal? And you kind of go, yeah, it's a good deal.
Of course it is.
and the next question is like,
price,
what do you mean? And it's like, well, it's a good deal. There's no tangible data that we can look at, track records, ROIs in any brackets of the market. And it's almost bizarre because it's a huge market, billions of dollars being turned over. I think we talked about this in one of our sessions on Airbnb pre-COVID. You had like more than 40,000 hits on it. Yeah. So we need to really get together, I think, with all the stakeholders and create as much data as possible, because then we'll see, I wouldn't say more qualified investors, but a different type of investors, investment funds and so on, that will lift the market to the next level, which I think will be good for not just Bali, but Indonesia in general, yeah.
Do you think then that what you specialise in, Ross, and what we're identifying as a clearly a need here is building market confidence? It's encouraging people to not shy away from the idea of investing in a place like Bali. Is the exercise to kind of make people feel more comfortable with spending $1 million,
sure.
That kind of thing?
Well, no question. I mean, I think that Indonesian real estate, particularly in the hotel sector, is competing in an international capital market. People have other opportunities. They can invest in Thailand, they can invest in Vietnam, they can invest in other Southeast Asian countries. And the countries and the industries that provide greater transparency are in a better position to attract offshore capital, because major hotel chains, major international hotel investors are accustomed to really in-depth information, and when they come to Indonesia, if that's not available, it makes the opportunity of transacting a sale or a purchase much more difficult. So
does it actually kill the deal if the data's not there and the analysis isn't there?
Most definitely. I mean, people are left attempting to bridge the gaps. And it just makes it much more difficult. And having been involved in major transactions in North America, other parts of Asia, and Europe, I mean, the data rooms are usually filled with information and data, which potential purchasers can utilise. I'd go so far as to say that a lot of the data that's provided by the Bureau of Statistics here, PBS, for example, a lot of it is in PDF format, but investors are wanting easily accessible data and providing some of this information in Excel spreadsheets is time saving. It's looking at the needs of people who are undertaking due diligence. And assisting them in getting a better handle on, the investment opportunities, because there are many investment opportunities, and I think there'll continue to be many more in the future.
What's your take on that, Terry, for the investment opportunities? What kind of areas do you see the sort of the best opportunities? Is it with hotels? Is it distressed assets? Is it villas? Is it land? Or a mix of everything?
I think it's a mix of everything, and I think that like I said before too, it's difficult to talk about the Bali market in financial terms in any aspects of it. I think also what we see is, like, we get calls from investment funds who's looking for whatever it is, distressed asset, 4 or 5 star hotels, whatever it is. And the first question is, like, what do you need to be able to qualify a possible purchase? And they come with long list of points, and right away, sorry, you can't get it, and it stops. I think also that the sort of market promise that is out there now, maybe more towards villas, but maybe also on hotels and boutique resorts. There's a lot of, if you go on to different web pages, you go on to different magazines and information pages, it talks about 12%, 10%, 14% guaranteed ROIs. But there is no track record showing that. And Indonesia is now on a bit of a journey in the sense that it's normalizing its legal system. There's more and more consumer protection regulation. So I think in not too distant future, we cannot say that. You cannot say that. You'll face litigation for it. And then what do you show the market? Because you don't have a track record. You cannot say anything. An interesting exercise that Ross went through in the sort of seminar yesterday too is that when you quantify the value, you have a different conversation with both the buyer and the seller. And the gap there for the broker, that being a resort or villas, is the 8% to 10%. So our job is close that gap. Sometimes you'll start off with, it's just miles apart, and there's no again data to sort of engage with both parties.
You mean miles apart in the sense of the seller is expecting and what the buyer is prepared to pay?
No, I think that, like an example again yesterday that was used, that this villa has Italian imported marbles and therefore it's $200,000 more expensive. And it's like that may or may not be for one buyer, but for the general market, you cannot present the property like that. Yeah. Right.
It's funny when that was happening yesterday. I kind of went back to when we first started Seven Stones. We were doing the training sessions every day, and we were talking about perceptions. And you stood up and said, I think you wrote on the whiteboard, or tried to write on the whiteboard, the word apple. and everyone had a different perception of what that was. It could have been a phone, it could have been a laptop, it could have been something that you eat, and all of that kind of feeds back into what your perception
We're
was.
actually like one of the challenges we have here in Indonesia too is that the government doesn't enforce regulations in terms of brokerage, in terms of being a licensed broker, being real estate or hotels. So the sort of joke is that everyone is a broker. A taxi driver is a broker. The security guy at whatever restaurant is a broker. So with that, you get thousands of perceptions and thousands of messages, and then you get into the legalities who also sends different messages. And I think we scare away an awful lot of good potential investors. They just, no, I can't. Yeah. And that is not good. And then you end up with a lot more of, I shouldn't call it cowboys and Indians, but people who is either emotionally attached, and that's fine, they want to have a piece of paradise, but also people who will take a gamble, and it may not be the best opportunities for the market. So I think the market needs to not become more conservative, but more regulated and more measured in the aspects so that more people.
I mean, we've both been doing this for quite some time, and it's
a long time actually.
Yeah, it does come across to me that the data, particularly the data that you use, Ross, it's like it's almost it's mine. You can't have it. I'm not going to share it with you. It's my database. It's not for public consumption. There's very much, for me at least, that sense of it here.
I think there's a lot of fear among real estate agencies and even some of the bigger franchise holders in Indonesia they worry about open up because they worry that they won't be able to compete with other players coming in, rather than sort of looking the other way. How can we lift ourselves up and be part of this and then attract a larger market? It's a very, very weird.
Well, I think the exercise really is using data to grow the pie. If there were more investors looking at, say, villas here in Indonesia, and I know in particular Bali, if you were to double the number of people who saw this as an opportunity to buy either a lifestyle retirement villa that they might live in for the rest of their lives, or in fact as an investment opportunity, if the market grows, everyone benefits. If the market's not growing, that's when you get cannibalism and people,
I think also the market here, when we know most of the real estate agencies here and also in Jakarta, and some of them are doing well, but most of them are like a couple of deals maybe a month, which is like, when you look at the overall market size, it's nothing. Why are we looking at each other as competitors? Why can't we come together to do like Ross says, get the data out there, and you'll get a much better turnover in the larger market and easier sale. Like we know, you have a buyer that comes and look at something, and it'll take them 3 months, 6 months, sometimes a year to make a decision because they cannot measure it. And if you can mature them quicker through that process, then again everybody wins, and the market will definitely grow. Yeah.
I mean, from your experience, Ross, you've done this in Australia, you've done this in Europe, you've done this in the States. Is that data more readily and easily available in different places?
Oh, most definitely. I mean, clearly North America, the data on not only condominium but villa sales and hotel sales, there's an enormous amount of information. In fact, the challenge is to garner the information that you want from just a plethora of data. There's an overload of data, and
that's all in the public domain.
Yes, yeah. Well, no, some of it you would purchase. Organisations like STR provide information on competitive sets for hotels and that sort of thing. But a whole range of real estate organisations are collecting data and disseminating data. A lot of it's for sale. Government sources provide a lot of very good information as well. So. No question. I think the transparency of real estate and real estate in many other countries is treated as a commodity. It's bought and sold more regularly than perhaps, say, hotels in this country. I think that there are legacy owners that have purchased a hotel and it's been in the family or the conglomerate for 10, 20, 30, 40 years. Whereas in North America and Europe, hotels and other hospitality real estate are treated as commodities. they're bought and sold in a marketplace much more regularly than here in Indonesia. And I think that if Indonesia real estate, and particularly in the hospitality space, is going to compete for capital from offshore, then developers and investors in this country need to understand the data expectations that investors have and are accustomed to in other investment destinations around the world. But it's there's certainly challenges. Bank Indonesia is a very good source of information, limited information in relation to real estate. But in terms of rates of return on hotel investments, different types of hotels, are we looking at what we call core investment returns, which may be 4 or 5%, or are they opportunistic returns? And there are many private equity groups around the world that are looking at opportunistic investments, and some of them are looking at cents in the dollar, and they may not be finding opportunities here in Indonesia, but greater transparency and more data that can assist offshore investors really shorten.
Do you see the sort of the face of hospitality, particularly in a place like Bali, the face of it changing? And I'm kind of leaning in towards this idea, the conversations that we had before about the idea of quality versus quantity, and how tourism generally globally has gone through this shift. Pre-COVID, it was actually going through this shift. I remember reading and writing stuff around a report to do with Booking.com and Traveloka and Agoda, and they were all predicting that there was going to be a shift into more experiential kind of holidays and places to stay. If you look particularly here in Bali, and you look down in Nusa Dua, you've got all of these 4 or 5 plus star hotels down there. They're not going to be running occupancies like they used to run. So do they need to kind of paradigm shift into a different way of thinking about tourism?
I think that's a challenge for tourism generally, because it seems that every generation, whether it be millennials or Gen X's, Gen Z's, are looking at...
We were talking about that yesterday.
That's right.
You're a baby boomer, right?
Pre-baby boomer. But there's no question that people's expectations of leisure, pleasure, bleisure are changing. And if you look at the growth of boutique and lifestyle brands in the last 10 years, it's been astronomical worldwide. And I think that gone are the big box resort hotels.
Yeah.
That was a thing of the 70s and 80s and 90s.
But the interesting thing, we've spoken about this a lot, that you've got those physical bricks and mortar structures already.
Yes.
What do? Knock them down and start again?
Well, I think in North America, a lot of the integrated resort developments, there's a repositioning and a rebranding and a repurposing. That they're looking at these large integrated resorts that may have 1,000 hotel rooms, maybe in 2 or 3 structures. How do you reposition those, and how do you make them more intimate? Is the challenge, because one of the great cornerstones of the major resort developers over the years is many people want to get away from it all. They want to get away from work. They want to get away from where they live. They want to get away from their workplace. But they don't want to go so far away that they're not still mixing with people. So that's the challenge, I think, in resort planning, is how do you give people the opportunity of privacy in a resort, but also the opportunity of mixing. And I mean, I think Club Med was perhaps the most successful of that many years ago, because you went to a Club Med and you end up meeting people because the way in which they orchestrated people mixing. But not suggesting that Club Med is the only opportunity. But so I think that most of the major brands will be looking at potentially repositioning and repurposing a lot of the big box resort hotels.
We on our conversations, Terry, we were looking at the idea of repurposing some of these big, like you say, these big box hotels, particularly down in Nusa Dua, to focus a little bit more on medical tourism. So you've got, I'm not saying turn them into hospitals, but certainly maybe have a couple of floors where there's a facility that people can come and recoup after an operation, or maybe have some, holistic treatment of some kind, I mean, that's a possibility, no?
Yeah, I think what we talked about, that a lot of these hotels, even pre-COVID, weren't doing great, and I think they're going to struggle to get back into the market now after COVID, and I think that they will be forced into some kind of different mindset to what to do with the resorts. And I think those options you have. Bali, and the Indonesian government now is saying that Bali wants to focus on being a medical tourism destination, which is a story in itself, and I think it's a long way to go before Indonesia will compete with Thailand and Singapore and some of these established market in what we call allopathic health. But I think in the holistic health space, there's a lot of opportunities, and then a much quicker positioning for Bali, which, when you talk about holistic health too, it's not like you're going to a hospital. If you go to a hospital and you're not sick, you will be sick, because the whole energy and everything is just not the right. But with the hotels here, you can do smaller clinics where people come for different types of holistic treatment packages, healing, the right food, and so on, and then they'll get the long-term staying guest, which will help them maybe save on marketing costs and so on. And when you look at the general growth of holistic health worldwide, it's a massive potential. I think maybe also for years and years and years we've seen a couple of general managers retiring or wanting to do their own business, and they come out and say, I'm going to create a retiree resort in Bali. They never take off, because the bigger players in Australia and the sort of nearby markets, they're not interested in disturbing what's going on until it makes financial sense. How does it make financial sense? You need to have data. So when you can talk to these big groups on that might be an option too. Or maybe it becomes some kind of residential area. You can knock down 3 rooms and turn it into an apartment or something like that.
Yeah. I mean, I don't know how many hotel rooms we've got here. What? Give me a rough guess.
There's about 46,000 star rated hotels in Bali, thereabouts.
Rooms?
Yes, rooms.
Yeah.
And it's been growing at about 8% per year over the last, say, 10
You see
years.
it continuing in that way?
Yeah, I think that, like most markets, until they really mature, you're going to see oversupply, undersupply, oversupply, and the typical cyclical nature of hotel development and hotel operations. But as markets mature, and the debt markets understand risk and oversupply, we're likely to see this sort of undersupply, oversupply for some time.
Does that come with a time frame?
Well, I guess if you look at normally it takes 2 or 3 years to develop a major 5-star hotel, and clearly there's this lead time, and there's a bit of a herd mentality in terms of hotel developments. If people perceive other brands and other groups becoming involved in development, there tends to be a prisoner's dilemma type concept that they need to be in it as well. So
it's a bit like that down on the booking, isn't it? With we've got Kempinski's, we've got I can't think of the names right now.
Raffles, Ritz-Carlton.
Yeah.
Sure. But I think that coming out of COVID, one would hope that people have seriously looked at where Bali has come from, where it is today, and the opportunities going forward. There's time to reflect. I know you talked about quality versus quantity. I think it's one of the great challenges for governments and tourism authorities. How do you attract only high expenditure tourists? It raises questions of equity, and it's an enormous challenge. I mean, not only is Bali facing some of those challenges, but there are major destinations around the world that are.
Well, it's interesting too, that whole concept of what does quality mean? Because there's different perceptions. Again, it's the Apple thing. It's one person's perception of quality could be it's great value for money.
Yes.
Another person's perception of quality is because it's got a branded thing like a BMW or a Mercedes.
Yes. Yes.
Doesn't matter how much it costs.
Sure,
It's just
sure.
I just want the logo on it. You know?
I guess people talk about high quality tourism meaning high expenditure. So people are really saying, look, we may be better off having half the number of tourists coming to Bali if the people that come spend 5 times as much as
stay
twice as long.
Yeah.
And there are all sorts of implications for that. Of course, you've got certain people would benefit and certain people would be disadvantaged if you only had high expenditure. I mean, a lot of service industries that are supporting, medium to low income type visitors would be displaced because you'd only.
Which in a place like that, like this, it's a bit of an issue because I don't know what the official numbers are, but it's upwards of 65-70% of the population of Bali is somehow involved with the tourism industry.
Sure.
Right?
I think pre-COVID it was 80%.
Wow.
Yes.
Direct or indirect, yeah.
Yes. And if you look at, what's happening, if you look at the growth of 3-star vis-a-vis 4 and 5, now while many international visitors are seeking 4 and 5-star accommodation, a lot of domestic visitors are still looking at 2 and 3-star and potentially 4. And so if you were just to look at attracting high spending international visitors at the expense of growing the domestic market and growing other markets.
That's risky, right?
It's all sorts of political implications, I think, and economic implications for people who are maybe of modest means who don't want to be discouraged from coming to a place like Bali. It's a major challenge.
I think it's interesting to see the central government and also the provincial government now says more and more that we're no longer going to chase figures for the sake of figures, meaning volume of people coming in. I think they learned that it was kind of going the other way pre-COVID with, $0 tourism, mass markets out of, India, China, whatever it was. And, all these markets are obviously welcome, but there needs to be a strategy. So when the government now says, we want quality tourism, then they also need to come with what's the concept to attract that quality tourism? What's the concept to attract the investors that will spend money into developing resource infrastructure and so on? But I think there also is a lot of opportunities like the government now allows for the provinces to have a lot more independency in developing their own assets. So you can see in the case of Bali, they're thinking now they want to launch an investment fund, which possibly also foreign investment funds can then invest into. But then again, it's back to what's that fund going to do? What's the plan? What's all the aspects of it? And there's a few major sort of happenings in Bali now. I think down on the east coast, you have something called the Bali Cultural Park, massive area that is going to be a new tourist destination. And it's a great idea and probably will find its way. But you kind of go like, what's the thought behind this? Who is going to come there, markets and so on. And we understand that the motivation for the Bali government is to develop the eastern part of Bali and lift up the general population, labor and so on. On the west side, you then have now finally the beginning of the toll roads that will come from Gilimanuk and down to Mengwi and eventually into Denpasar. And there's a huge consortium behind that with big groups in Jakarta. And when you look at the feasibility of the toll road itself, it's like the next 50 years or something is probably not going to make a return. But there's a real estate game attached to that. So the same group acquires a lot of real estate along the coastline where they're talking about Paramount Pictures, the Disneys and so on to develop new areas. And I think you posted an article about the shift again now from the North Bali airport was going from east to west and back and forth. And that's actually attached to the same thing, that it'll probably end up now in the west part of Bali because there's big development groups who has a lot of land available. And you might even see eventually a shift away from the crazy ferries that people use across Gilimanuk to actually get a bridge and open up for the
that would be
markets across too.
If they did a bridge.
Yeah.
But in terms of those strategies, is that something that in your analysis, in your breakdown of the data that you're looking at, you would actually suggest, don't do this, think about doing that? It's not you're not just giving clients and investors graphs and numbers to look at. You're actually giving them thoughts to process.
Well, insights, no question. And in relation to strategies going forward, particularly concerned about sustainability and in terms of environmental impact. But I would talk about market sustainability. And I think we tend to look at Indonesia in isolation in terms of there are so many incredible potential destinations here in Indonesia, and the government's clearly identified at one stage 10 new Balis, now the 5 priority tourism destinations. But if Indonesia is going to truly be a major international competitor for capital markets but also tourism markets, they need to understand our competitors. Vietnam, for example, in 2019, Vietnam attracted more international visitors than did Indonesia. Now, it was the first time. And I just think that we should be very proud of these tourism and destinations within Indonesia, but we shouldn't take our eye off the competitors. And how are we going to compete against Thailand? How are we going to compete against Vietnam? And of course, it comes into sustainability, not only in terms of the environment and energy and water supply, but also in terms of markets. I think the opportunity of having more diversified markets, they may be high-end expenditure markets, but looking at different markets for different destinations in the country, I think is important.
Yeah. I think that's where the focus of all the stakeholders need to be into getting data and clear plans on the market. So rather than the sort of, I wouldn't call it a panic sort of action and so on, but you see now a lot of news on, maybe Indonesia should legalize weed because Thailand did that and therefore they get more tourism, or a 5 years digital nomad visa, which might attract, it's got to have a broader picture to it, and maybe there is in there, but it's all these chases that doesn't lead anywhere. But you do see now more and more, and I think we discussed with Ross too, that the trade agreement between Indonesia and Australia, the SEPA agreement, and this organization called Catalyst is starting to do more and more to help and support those aspects, so that through that, the different Australian investment funds and others, and I think Ross was also saying that the Asian Development Bank has some programs and funding to develop this and support more data into Bali, Flores, and some of these these new destinations.
Sure. Well, once again, if we talk about potential, I mean, Australian hotel tourism investors haven't been big players in the Indonesian market, but Australian retirees are some of the wealthiest people in the world. And there is $1 trillion Australian dollars that's invested in all types of industries offshore, and regrettably, not enough of that, in my opinion, is found in Indonesia. Now, I think that Indonesia, the size of Indonesia and its ranking worldwide in terms of GDP and growth, it's a market that Australia has to look more closely at. And I think I would foresee some pension funds and superannuation funds looking at a range of opportunities here in Indonesia, and infrastructure is clearly a major priority for a lot of these superannuation funds. And of course, infrastructure has a direct impact on tourism, whether it be airports or maritime services and tollways and roads and bridges and all that sort of thing.
I mean, that's interesting as well. In the last week or so, we posted up onto BaliExpat.com a couple of stories about how the infrastructure development under Jokowi has just exploded. The amount of toll roads and harbours and airports that have been built, deliberately, I think, to sort of tap into that. And the amount, and that ties as well into the amount of foreign direct investment that's actually happened in the first 2 quarters of this year.
Yes.
They're breaking records all over the place with the amount of money that's coming in.
Sure, and of course, we're looking at the economic benefits today, but of course the enormous economic benefits will probably come in 5 and 10 and 15 years' time, because the infrastructure that's being funded and invested today.
So you're kind of almost crystal balling it when you're making your strategies and suggestions. It's, you're looking into the future for
Well,
10, 20 years?
No question. I guess in terms of looking at, for example, business hotels, you might be looking at the immediate environment around a business hotel in terms of infrastructure and what type of demand generators there might be. Are there new offices, are there new sports stadiums, are there new manufacturing plants being developed in close proximity to, say, a business hotel in a provincial city? But in terms of more leisure markets, then clearly major tourism facilities, tourist attractions, and Terry mentioned Disneyland and some of the major movie production and theme park operators. All of those things have an impact on the viability of resort hotels. And I think we've seen a concentration clearly. I mean, Bali is the iconic destination in Indonesia, but I think that the next 10 years we're going to see some of these other regions, and one would hope that there'll be some synergy between, people may spend a week here in Bali and then a week out in Flores or whatever. So,
have you done your strategies and analysis in other parts of Indonesia, or has it just been?
No. I've done some work in different provinces and different regions. I've got a very large database on. I was going to say the 34 provinces. There are now 37 provinces, I track hotel supply and demand and the number of visitors and the tourism attractions within each of the provinces and many destinations throughout Indonesia. Now I've got an enormous database on trends and. Both looking at international visitors and as well as the growth of domestic tourism. And I think that's, we talked momentarily about medical tourism. And one of the reasons why the government is so interested in developing medical tourism is that a lot of Indonesians travel offshore and they're spending tens of billions of dollars every year on medical medical operations and things of this nature in places like Manila and Bangkok and Singapore, and I think the government's saying, well, if we had better facilities and services, a lot of that expenditure wouldn't go offshore; it would stay within Indonesia.
Yeah, that's.
I think we did some studies into this too, and sort of looked at it, and I think figures like the Singapore health tourism, 50% is Indonesians.
Yeah.
Malaysia, 70% is Indonesian. It's a massive capital flight.
Yeah.
So that in itself is a, or should be a very strong motivation for the government to then open up and be more.
I mean, that's kind of interesting. I think we were writing about something related to this a while ago, because it's not just a question of, I need to go to the hospital to get something removed, or I need to go to the hospital to have some kind of surgery, because after you've had surgery or something removed, you've got to recoup somewhere, you've got to recover somewhere. So you need almost like a mix of both, don't you? You need the facility to be able to do that, and then the opportunity to kind of really chill out, really, and get better.
Yeah, I remember, I think it was, I lived a year here in 97, 98, and I went to see a lot of the GMs out in Nusa Dua, and I talked about spa. And said, you should get spas, that lifestyle changes. You see this in Europe, US, and so on, where people will check in for a month. And it's like, no, nobody's going to do that. They just want to lay around the pool. And then you had Mandara Spa seeing this, and obviously had the capital to drive it and built a massive network of spas that eventually I think cashed out at something like $100 million. And I think you have those opportunities too in holistic health to create clinics and drive that market together. I think one of the aspects too with this infrastructure and the government, it has to start somewhere, but you also see now infrastructure creates easy access and in some ways, flow of goods and capital and development, but the lack of then planning to what comes around this and what in tourism or also other industries isn't there yet. So you see a lot of these huge state-owned enterprises now is going to spend an awful lot of money into infrastructure, and they struggle to defend those expenses in the sense that the return isn't coming. And they do have the capacity to also do the real estate and whatever else, factories, energy, and so on, as a part of that. But again, it's about the planning around it, and what we also see in tourism. They need to have those structures. set up as part of it.
I don't know, 3 years ago or something like that, we were asked to be involved with the Lake Toba Tourism Authority to talk to them about some ideas about branding. And it's quite amazing what didn't happen
Right.
after those meetings, and almost the opposite of what we were talking to them about happened. So instead of kind of trying to develop a much more community-based thing where the local people would benefit most from all of these different aspects, they do Formula One boat racing on the lake.
Right.
Which is not really what we were talking to them about.
Sure.
Yeah. It was almost like there was no planning with those guys. It was.
I think there's a lot of attempts, and again, it's a process to mature into this.
Yeah.
And we see this in other businesses too. That there's enormous demand for energy and mining and whatever, but there isn't much, again, data or feasibility studies done to be able to attract on a large scale investors. But I think the government is realizing, and that will happen.
Yeah. I mean, I was checking out your LinkedIn profile this morning, Ross, to kind of give me some ideas about who is this guy.
Right.
And there's actually a really interesting portfolio that you've put up there. But one of the things that you say is that you believe that accurate information on uncertainty leads to better decisions.
Yes.
Explain what that means.
Well, I mentioned earlier risk, and many people approach making an investment, and there's a little difference on opinions when it comes to rates of return. If I say this is going to give a 10% annual rate of return, you and I know what that means. But with return, we should have a better understanding of risk. And it relates to uncertainty. Essentially, risk can be defined as the probability of foreseen circumstances not happening. So if you can get a better handle on uncertainty, then you'll have a better understanding of potential return, because it's a function of looking at risk and return. And people say, a lot of investors say, "What's your appetite for risk?" That's the question. Now, what they're really saying is, if you tell us. Give us some insight in terms of your understanding and your appetite for risk, we can show you the types of investments that may suit that, because with higher risk comes higher return. And I think this is one of the great shortfalls of, say, the hospitality sector and here in Indonesia, is that over the years I've said to investors, what type of return expectations do you have? And 9 times out of 10 the answer will be, well, the highest return expectations. I said, no, everyone wants the highest return, but what's your appetite for risk? And if an investor says, I can live with uncertainty, and I'm a risk taker, then you'd be expecting maybe 18 or 20% internal rates return. But if someone says, no, look, I'm averse to risk, I'm not good with uncertainty, then they're a core investor, and big institutional investors and superannuation funds and pension funds may want 4 or 5%. And so the capacity to understand risk and the parameters of risk is really, really fundamental, in my view, to assisting investors realise the returns they have, returns that they can expect. So I've spent a lot of time over the years. Now, how do you derive a better understanding of risk? Sometimes you can look at history, and you can look at what we call the standard deviation, which is essentially giving some understanding of the range of potential returns. But there are different methods that we use to assist investors in quantifying risk, and some of it's subjective. We may ask 4 or 5 experts in a marketplace to give us their estimates and the extremities of a factor, and they can provide that, and we combine it in a statistical sense to get a handle on risk. So when it comes to hotel and resorts, there are clearly a lot of risks, and it's a matter of quantifying them and assisting. So the trade-off is, you might have an investor and you say, look, there's a potential 15% rate of return. but there may be a 25% probability it could be 20 plus or zero. And so we're attempting to look at the distribution.
Have you ever had any complete and utter failures with offering sort of the analytical advice? So you said to an investor or a group, you're aware of the risks, this is what the potential could be, and it just falls on its ass.
Good. Well, I recall one example where we looked at the feasibility of a major theme park in Australia. This is some years ago. And we looked at risk and return, and of course there was a pilot strike, unforeseen, a major pilot strike in Australia. I think that was in the late 1980s or early 1990s. And the pilot strike was for 3 months, and of course there was no patronage at the theme park. So, so that was, there are what we call black swan events that we can't, COVID for example. Who would have predicted 2 years of pandemic and COVID, and so it's these black swan events that can create issues.
There's nothing you can do about
nothing,
that.
Nothing. So, but by and large, I look back over a 35-year period where I've presented simulation models, and by and large, we talk about confidence intervals. At the 70% confidence interval or the 95% confidence interval. And by and large, we've the issue for me is understanding variance. So if I say I believe there's an opportunity to make a 20% rate of return, internal rate of return, I will very rarely provide what we call a point estimate. A point estimate is just 1 point, a 20% rate of return. What I do is say there's a 20% rate of return, but there is whatever probability the client may require. I say there may be a 10% probability that you're going to lose your shirt. And there's a 10% probability you might make better than
20%.
Maybe 30%. And the client says, okay, but sometimes a client might say, look, I'm risk averse. If you're risk averse, then you may be looking at a 10% return with a smaller spread. Because everyone talks about risk-adjusted returns, and essentially they're taking risk and a return and comparing the two. And the concept of risk-adjusted returns, you're adjusting the returns based on the risk that you potentially you could face. And different hotel funds have different risk adjusted returns that they look at.
Do you think there's a particular sort of person, a particular sort of investor that's more leaning towards taking risks, or is it what's the makeup and the characteristics of somebody that says, what, Ross, I'm up for it?
Yeah, well, I guess experience. I mean, I've had the experience of speaking to people who've owned hotels over a 30 or 40 year career. Private individuals that may have owned a portfolio of 10 or 15 hotels, so they become more familiar with that product class and more familiar with risk and return. And over time, I think, interestingly, 30, 40 years ago, hotels were not considered a major asset class when it came to real estate.
Really?
No. Hotels were a very difficult asset class to finance and to attract investment. But what is it? And transparency has helped in that process. Today, hotels are a part of the food chain for most, private equity groups and
what was the trigger then? The change?
Well, I think there was more understanding. Back in the 80s, we looked at hotel management contracts. We assumed that hotel managers who were coming to a hotel investment, given how you would tweak the returns to a hotel operator, provided greater assurance on the part of investors. And I think just over time the industry has matured. We understand risk to a far greater extent today than we did 30 years ago in institutional quality hotel investments. So today in North America, I mean, you talk about real estate investment trusts, you talk about private equity groups who have large hotel portfolios, and it's now recognised now. Very few funds that may be involved in office retail, residential, industrial, would put, they might put 5 or 10% in hotels, hotels and resorts and the leisure industry. It's still perceived as a higher risk, higher return asset class compared to, say, office or retail. But today it's now recognised internationally as a viable investment medium for funds.
But I think what I'd like to see is that we talk about the different natures of investment fund, pension funds, and so on. And I think Bali now is need to be ready for larger investment funds. Investment funds will come in, they'll buy 3, 4, 5 hotels, maybe more, or we could get someone who says, I'll buy 50 villas, and they'll sit on those and produce data for some larger entity, pension funds or so on, to pick it up. So we get into an uplift of the market, and therefore a lot more capital into the tourist market of Bali. And I think we're fortunate to have Ross dedicating his energy and full time towards Indonesia, and he sees the potential. I think that's going to open up doors one way towards Indonesian government and stakeholders to take this serious, and then eventually also larger investors coming in. And I think the difference from I've seen and I still see, and Ross has worked for a lot of them, the approach to the market that Ross uses is very, I wouldn't say very different, but very, very tangible, and the quantification. So when you have a feasibility study, you can come with science and statistics that shows that, oh, you got an 80% chance, oh, let's go, right? Or 20% chance, then obviously you don't. And I think a lot of that sort of, we see this all the time, feasibility studies, whatever you want to call them, most of them aren't actually feasibility studies. And I think that stakeholders in Indonesia too, those larger group that owns hotels, they're into a new generation of owners, managers, directors that's been educated abroad and has a much more in-depth understanding of this. But I remember maybe a year ahead of COVID, I was sitting with another hotel consultant that did a feasibility study into a project not in Bali, but another tourist destination. And we went back and forth on that quantification, and the particular consultant was very determined on the figures and so on, talking about I have liability towards these figures. I can't just make them up so that you can go to the bank and borrow your money. And in the end, they sort of met half in between. And I was called in later to that particular owner and said, I can't go to the bank with this. It's great study, but the last 2 pages has a disclaimer. And I said, that's a joke. It was kind of like a bundle like this. I said, maybe just tear them out. That's probably what happened.
They did.
Yeah. Interesting.
Yeah.
Yeah.
So a lot of it really is connected to how serious somebody is going to be to take your advice and your direction. Not just how serious they are, but I keep getting back this feeling of there's particular sorts of people that do it,
Yeah, well, I mean, I guess there are some people, because of their experience, have more insight. But there are I think a lot of investors, where there's a vacuum of knowledge, people will fill that vacuum with intuition, gut feel, hearsay evidence. They'll fill it with information they got from the last person they spoke to. And so I guess the role that I see for my consultancy is reducing the size of risk from a box that size to something that is that size. We can never, I mean, if there was...
You can't ever get rid of it.
No. Well, in fact, I mean, as I say, everyone has an appetite for risk. If you want no risk, you buy a government treasury bill. A 10-year T-bill out of the States will give you a risk-free return. But everyone has an appetite for risk. If you go into business, you have an appetite for risk. It's just how much risk do you have an appetite for? And I guess over the years I've been able to assist people in attempting to quantify the risk associated. Not in terms of, a lot of people use sensitivity analysis in cash flow statements. Now, sensitivity is a very, very crude form of risk analysis. Because if you're doing a sensitivity analysis on a hotel and you're looking at 60% occupancy and you say, well, let's just assume it doesn't reach 60% the first year, it reaches 50%. And you look at the bottom line and there's no bottom line. Well, you're not assigning any probability to it falling to 50%. So this is a more sophisticated way of deriving risk. I know I've harped on this risk thing, but it's been the core of my life for many years, trying to help investors narrow the area in which the unknowns are operating. And
well, we appreciate you, Ross. We appreciate your time. We appreciate what you do. We are looking forward to doing more things with you because we think you're on a winner with providing services like this. So thank you very much for your time.
Well, thank you.
Thank you, Terry.
No, thank you.
Let's get back to work. Thank you very much.
Thanks. Thanks, Terry. Thanks, Andy. Much appreciated.